The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 18th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential, that is something you and I, we must master each and every day. So let's begin our day with an empowering belief. I'm going to use the same one that I talked about yesterday. I like it so much, and it goes like this. It says, most people, not you, most people have no idea of the giant capacity we can immediately command when we focus all of our resources on mastering a single area of our lives. And one of those areas of our life that I believe we should master, well, I think we should master money management, trading. Another area is time. You see, once we master time, we understand that we typically overestimate what we can accomplish in a year, and we underestimate what we can achieve in a decade. One reason so few of us achieve what we truly want is that we never direct our focus. We never concentrate our power. Many dabble their way through life, never deciding to master anything in particular. Success comes from taking the initiative and following up. It comes from persistence, eloquently expressing the depth of your conviction. So the question that each of us must always answer each and every day is this: what simple action could we take today to produce a new momentum towards the success that we want in life? This much I know to be true. The path to success, it is to take massive, determined action. There's no abiding success without commitment, without conviction. If you want to be successful, find someone who has achieved the results you want and then copy what they do. You will achieve the same results, folks. It's nothing like having a good old formula for baking good old chocolate chip cookies or for making money. The time is now to master anything you want in life. Mastery, it is a beautiful thing. And speaking of mastery, next Friday, September 27th, I'll be teaching a Master Trader course where I'll teach you the tools that I use to trade the markets each and every day. I'll be compressing decades into hours as I host a Master Trader workshop, what I call the ultimate money machine. I'm going to teach you how to buy and sell the D points of an A to B equals C D pattern. I'm going to teach you how to identify the Gartley and the butterfly, the buy and sell patterns that you can it really allows you to get into a trend that you have missed out there. I'll teach you how to pull the trigger by using and identifying reversal candles in the marketplace. I'll teach you the ultimate momentum trend indicator tool. In essence, folks, I'm going to take ordinary tools and we're going to turn those into extraordinary trading strategies. I only wish that when I began trading that I had taken the course that I'm going to be able to teach. That's coming next Friday, September the 27th. All the details are on the homepage of TFNN.com. I hope that you will join me. Let's go check out these markets here. Relatively flat markets right now. We've got the Dow is down 14 points. No big deal. Traded out at 15,516. The S&P 500, we can go water skiing. We can go barefoot water skiing on this. It's up 81 cents right now. Trading at 1705. The NASDAQ Composite, that's up about 5, trading at 37.50. Russell 2000 down a point. So looks to me like we can expect a flat trading market, narrow banded trading market coming into about 2 o'clock. I believe that's when the FOMC minutes are released, the 2:30 area. And we got 2:30. We got Uncle Ben on to give us his verbiage, his take on what is going to take place, and maybe that's when we start to see the markets either move upside or downside. I guess it can always do the same thing, which is trade sideways, but I suspect that is likely not the case out there right now. Big mover in the market here is Apple, so they're taking a nice bite out of a nice, good old crisp Gala apple. They're not taking a bite out of a Gala apple, although I wouldn't mind taking a nice bite out of a nice big old Gala apple. Apple is up $9 right now, about 2%. Regeneron Pharmaceuticals, that had broken out a couple of days ago. That's continuing its move. It was in a consolidation range. We'll go take a look at that a little bit later in the show. Sohu, S-O-H-U, that's up $5 and change. VIP Shop Holdings, VIPS, that's up a nice $4, about 9%. FedEx is up 3.5%, up $3 and change. Adobe Systems up $3 and change as well. Again, our call number 877-927-6648. Feel free to give me a call. Be happy to take a look at your stock chart and answer any question that you might have out there if I can answer it. Let's start off and take a look at the Dow Transports. You know, we don't do that too often, so why not take a look at this? We're going to look at the markets here. We'll take a look at some of the bullishness, because if we were to not have Uncle Ben speaking today or releasing the FOMC meetings, the market call would be, in my opinion, very easy. Because what we'd be looking at here is, well, we just start off with the transports. Let's take a look at whether or not markets are above resistance areas or whether they're running into resistance areas. In the case of the Dow Transports, we're going to come all the way back into the trading session here from May 22nd. Interesting how it's May 22nd, and many of the markets, indices, ETFs out there was a key reversal day, and that looks like it was also a key reversal day here inside of the transports. It was also a bearish engulfing candle. So the high of that session turns out to be the resistance level, which was 65.62. Market went and moved lower, made an A to B equals CD down into the June 24th low out there. As it did that on the very next trading session, June 26th, had a nice little bull sash reversal candle. Of course, that was coming into a old hammer candle right back here as markets were moving down into June 24th. That says that the low of that hammer candle would be good support. Market never made it down to that level. Then what the transports also did when they made that reversal out of May 22nd, they eventually broke the trend. They did that on June 25th. That's the same trend line that we take a look at typically, or channel lines that we look at coming off of the November 16th area. In the case of the transports, they broke through it. We can see that the last time up, the transports were trying to get inside that trend. That was with a wide-ranging bar on August the 1st out there. They never were able to get back inside the original trend. Nonetheless, what they did do on this is coming back here a little bit earlier, back on the trading session of July 18th, wide-ranging bars. Markets do not end on wide-ranging bars, at least the next session. That is very unusual, and that's what we saw out here, where the transports went ahead because they were over a resistance level, and that should have acted as new support. And you can see that that level was, in essence, tested here for 2 trading sessions, but with narrow-bodied candles. That always tells you that the market is tired out here. Market moved right back through that old support level, which did act as a resistance on July 23rd. Now this 4-candle session, that's an evening star. Normally it's a 3-candle pattern, but it can form with 3, 4, 5, 6, as many candles as it wants. Still, nonetheless, a reversal session that set up a new area of resistance, and that would be the high of July 19th, 66.08, and a little bit of change out there. Well, you can see that that area was broken through with a wide price spread on that August 1st candle. Very first time down to test that level of support. That failed. That said that, okay, the breakout was a false breakout. Went ahead and made a low, as well as the Dow back here on August the 30th. Now, coming out of this move here, no single bullish reversal candle. Only thing that we've really seen on the way up is actually a bearish reversal signal as the transports moved into the old resistance level. Formed a 3-day, a normal evening star reversal candle. That set up resistance out here at the high of 65.92. Now, the last 2 times here, the last 2 times, then we'll see if third time is a charm out here. So the last 2 areas of resistance set up by candlesticks, market has moved up through it, and it's come back and it's tested it, and it's failed. Kind of interesting, isn't it? Because what the markets actually did yesterday was they closed, or the transports, I should say, closed up above a resistance level. So is the third time a charm? It's slightly closed above that area on the September 16th trading session, but so slightly above it that we're not even call that really a breakout. But yesterday, broke out a little bit further, but of course it was running into that 4-candle evening star pattern out here. But today you're trading above it. So the question is going to be, so for all counts what is it that I want to say? I'm not even going to say it. For all intent and purposes, there we go. What we're seeing here, what we're witnessing in the transports is a breakout. You see, the top of this swing point out here from August the 1st inside the transports, that's not a reversal signal. If anything, a break above that level, which would be 66.80, 686, you could also suggest is it going to be a breakup. But really, it's all the resistance that's been set up here. So we know 2 times it's failed. Each time that it's failed, it's went ahead and moved down to some lower price out here. So if we get a close today below, back in the lower part of the range on May 22nd, it says that we should see at least some kind of retracement. That retracement would most likely be a 0.618 retracement inside the transports, and that would take it down to about the level of, there we go, 63.89 out there, and that is in the transports, and that's taking a look at, resistance levels out there and breakouts. So the transports right now are confirming that they are breaking out. If we didn't have Uncle Ben speaking, it might make trading this a whole lot easier. If we go take a look at what the Dow itself is doing, well, in the case of the Dow, we go back, take a look at the May 22nd swing point. That's a real clear key reversal session that we had out there, real clear bearish engulfing candle. That area did really act as a resistance. Price did move up through that on August the 1st as well. A couple trading sessions above that area, and then finally came back careening through it and broke back into the lower part of the range on August the 6th. Price now has moved back up into that resistance level. As you can see, there is also some additional resistance here set up by this bearish engulfing candle that took place on July 24th. So these 2 red lines that you can see this little resistance button inside here, that the Dow itself, which has been the weak link, it caught up for sure. I mean, it caught up spectacularly. We can see here that the Dow is traded into a resistance area, and that level is held. So whereas the transports have broken out, well, the Dow hasn't, and the Dow won't have broken out to the upside, in my opinion, until it clears the July 23rd level of 15,604.22. I'm not so concerned about the 100% move of a move and a test of that August 2nd area, just looking at potential breakout. So that is inside the Dow. Let's go take a look at the other indexes out here. We'll just stay with the indexes for the moment. We'll just stay with the reversal areas. What should we look at next? What should we look at next? What should we look at next? Oh, we should look at next. Good. That's good. I heard somebody say out there, hey, Steve, look at the New York Stock Exchange. So let me switch over to that stock chart here, and we'll take a look at the New York Stock Exchange. You want to talk about breaking out over, this is because I love the New York Stock Exchange because it's the wider breadth of the market. This gives us really a better indication of what's going on than anything else. And as we take a look at that May 22nd candle, that key reversal, that bearish engulfing candle out here, you can see the high of that is 96.95.46. And guess what? On Monday, when the market was gapping up, the New York Stock Exchange gapped above resistance. Now, of any stock chart here that clearly shows the resistance lines because it shows how this area has held, we can move this little red horizontal line up and down. Take a look at how this area here has really acted as resistance. So it clearly has broken out. It did that with the gap on Monday. You saw a additional higher move even this morning, just trading up a bit out here. So what's going to be key for us to be paying attention to, because it will determine whether or not this is a real breakout or a false breakout, is if you see the New York Stock Exchange close today below 96.95.46. Guess what it's saying? It couldn't bust it up. And if it can't bust it up, it'll go ahead and it'll try to bust it down. 877-927-6648. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I mentioned Regeneron Pharmaceuticals during the first segment out there. That is up $9 and change this morning, up 3%. That's what I've got on my screen out here. If you aren't listening on the radio or your mobile device at TFNN.mob, I remember the archive of this show is on channel 10 out there, and you can always get the live stream of this by going to the homepage of TFNN.com. On the right-hand side, you will see that button with 3 little smartphone devices on there. This show will stream live to you. Now, in the case of Regeneron Pharmaceuticals, clearly had some lines drawn in the sand where the bears were hanging out, where they were camping out. We come all the way back here to the trading sessions, the 3 trading sessions of May 13th, May the 14th, as well as May 15th. May 15th scandal, what it did was it set up a bear sash as well as an evening star formation candle. That says that resistance was really at the high of May 15th. That was the high of those 3 sessions, 283.99 out there. We can also see another evening star formation that took place after this little doji high out here on July 22nd. So you've got a bearish engulfing and an evening star. That set up resistance at 282.27 out there. We had a little bearish engulfing engulfing candle right out here, a little bear counterattack. This one right here is not really a bearish candle, in my opinion, not one that you would use. But nonetheless, we did set up another bearish engulfing candle right here on the trading session of September 12th. So we also had a rectangular consolidation zone. I've drawn in a conservative version of that consolidation area that says that once price broke above it, which it did on September 13th, did it with 1 million shares. Now, it was 1 million shares going against 855,000 shares, the swing point from July 22nd out there, as well as above the volume on May 15th with 844. So this is a nice break because it's above resistance as well as above swing points with volume. It doesn't get much better than that, and that set up a move equal to or greater than the consolidation area. So this says that Regeneron Pharmaceuticals wants to head towards the 338-ish level out there. Right now trading out at 309. So that is a nice breakout. Of course, it is moving into the overbought condition. I suspect it'll go ahead and complete the pattern. It should be able to complete the pattern. You have enough energy and enough juice in order to get up to that 338 range before going ahead and backing off. Now, if that's not the case, and at any point in time that this backs off and it comes back to test the consolidation area, which would mean the 282 level, that's what I've got on my sheet of paper. This is what I'm waiting for, because when you break out of any kind of consolidation, what oftentimes happens is you'll come back and test that just to confirm that the move is, excuse me, is real out there. It's got a little speck of dust in my throat out there. So on Regeneron Pharmaceuticals, you don't have to chase this one here. See if it'll come back and give us another opportunity right around the 283, 282 level, especially if it can come back there with light volume. So while it's up in this overbought territory, it gives us that opportunity that could actually take place. So that would then be a buying opportunity, because then you'd be buying at about 282. Your risk management would be in place. You could take that trade up to about the 338 range, and once if it were to close back inside the consolidation box, then you'd go ahead and close out the trade and maybe come back in. You'd keep your losses very tight, and you'd want this thing to prove itself to you. And that's on Regeneron Pharmaceuticals. Let's go take a look here at bonds. We'll take a look at the commodity sector. Let's take a look at what do we have going on here with bonds. Bonds here right now trading back inside that candle. Look, to me, yesterday wasn't with conviction, but really was trying to give us the next buy signal yesterday, because I was looking at a close above 130.02. But with Uncle Ben coming out on the stump today, I just kind of kept my hands. I've kept my hands in my kept my money in my money fold out here for the moment. I'm just looking for a better signal. I've got some short-term signals, and I've got some longer-term signals that suggest that the market is not going to respond well no matter what Uncle Ben says out there. But still, nonetheless, I want some additional information before I just simply go ahead and pull the trigger. I don't see the benefit here of trying to sell the top tick, nor do I find the benefit here of trying to get overly bullish. As we just took a look at, the New York Stock Exchange, the transports out there. We'll take a look at a couple other indexes as well. I can give you the bullish signals out here, but with regard to knowing what happened May 22nd, that key reversal session, as well as some of these other hidden gems that are out there, it just says, you know what, there are times when you just need to, there are times when I believe that you need to be cautious. I think it's always good to be cautious out there, so there are times you need to be especially cautious. And here, inside the 30-year Treasury, looked like it was going to break out. It has broken back inside that candle session from September the 5th out there, and so it just says, be patient. We're not getting any kind of signal there. Goldilocks pulling back as well. Right now you've got gold trading out at 1,300. Still, has it gotten to the swing point? No, it's going to head down to that swing point for sure August 7th. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. A little more movement in the markets here. The Dow is trading off about 35 points right now. Not a big deal. The S&P is off 2. Composite, though, just turned slightly red, down 5 cents right now. We got Regeneron Pharmaceuticals taking the lead in the horse race out here. It's up $11. Apple falling to being up by $9 right now. Let's go and let's finish off the commodities here. Take a look at that sector. Now, gold, as you know, if you've been listening in for a couple of days here, gold had stopped right at about that 1305 level. It's traded at 1301, but at that 1305 level, we had a nice 1.618 expansion of a swing point, a 618 retracement, a 0.786 retracement, and that area failed. It gave way last night. Now, gold has not made its way down to the most recent swing point low, which is August the 7th. The top of that is 1289, has not made it down there, so it should get down and tag that. Had that volume of 145,000 contracts on that trading session. So far today, it looks like about 99,000 or so. Looks like gold should find some support right around the bottom of that area, right around 1276. That would be a total 0.618 retracement off of the low from June 28th's low to the high that was put in on August 28th. But if that area fails, you got the 1233 type range for gold to pull back into. So just be careful. I don't see any bullish signs here, any reason to try to buy gold at this stage. You want to just simply wait for the next signal. Because why? Well, first of all, if we're setting up an A to B equals CD up, it's a heck of a nice leg. You're talking 1179 up to 1434. That's your A to B leg. So just be patient and wait for that C point, that potential C point to form out there. You don't have to buy the bottom tick. If we take a look at high-ho silver out here, silver right now, that's trading out at 21.49. You can see that is very much nearing the 0.618 retracement level. It's anywhere between the 21.37, 20.83-ish range that it's at here right now. If we take a look at where the 1.618 expansion, that's at $20.80. So I suspect we'll see silver make its way down to the 20.80-ish range. It's at 21.50 right now. Light sweet crude, on the other hand, that did not hold yesterday, did not hold the 50-day exponential moving average, but you can see today it's back right above that. That's an area that is held as support out here. Light sweet crude that is just simply been trading in a sideways range ever since July 5th. So we're talking now over 2 months in a sideways range, which is about a $7 a consolidation area. We covered bonds earlier. Let's take a look at natural gas out here. Natural gas pulling back today. Candle session is not over, but it's back inside that key reversal session that took place on September 5th. So the breakout here for the last couple days may turn out to be a false breakout. I believe inventory numbers came out a few minutes ago. I don't see any substantial impact here. Of course, I don't know what took place in the last few minutes out here, but on natural gas, it's a nice-looking chart. I was in the trade. We ended up getting out of the trade probably right about here on August the 23rd, and so I'm looking to get back in this trade on a nice little pullback out here. We'll see if, in fact, the market goes ahead and gives that to us. Let's go back to the indexes. Let's go take a look at the NDX 100, see what we have going on out here. Now, in the case of the NDX 100, there's our May 22nd key reversal bearish engulfing trading session. The high of that was 30.53, the low of which was 29.84. We can see that really set up a very nice area of resistance. Now, in this case here on the resistance line, your resistance top is going to be the high of the session. But in this case here, you can see we want to be flexible with regard to where price naturally gravitates itself to. And you can see it ends up being the open of that trading session on May 22nd. That is the real resistance/support area, which is a price level of about 30.2745. We can see here that price broke above it by gapping up on July 11th. Price came back and tested that area on July 23rd, and that held. So as we take a look at as price broke above this region, then where is the next bearish signal? So if I go ahead and I blow this chart up and you look at it, as I circle this area, so we'll call it between right here where my cursor's at, we'll call it between the August 2nd area, right? August 2nd is important. Where's the next bearish reversal signal that you see out here? Yes, you're right. It's right here. It's this bearish separating line that took place on August the 6th. It also was this bearish engulfing, so if that's the one that you got, that too, and then you had that gap down. So that really sets up here as another area of resistance right at the top of that range. We'll go ahead and use another, this time let's just use a red line out here. So that becomes another area of resistance, or should have been another area of resistance inside the NDX 100. So it is up above that level. It did that here by the trading session on September the 9th out there, Monday, September the 9th, as the markets had moved higher. So the NDX 100 does not have any other resistance out here. It sold off on the 16th here as the markets had gapped up, and this sold off, but it's not a reversal signal. If anything, it's got support, and until price breaks below that level, which we're going to call now the August 5th high, which would be 31.4525, this chart here is bullish. So there's another one. So when you just take a look at charts out there, you see a lot of bullishness. I think what is key for us to be paying attention to, and in this case here, you could actually get it today inside the the NDX 100 is going to be, last time that Uncle Ben really spoke about the whole tapering issue of any significance was May 22nd. We saw that key reversal session. So if we see another one of those with the market being near the overbought territory, it just means you got to keep your eye on it. You've got to keep your eye on it. But as I say, when we take a look at just plain vanilla stock charts, irrespective of everything else out there, they all look pretty darn bullish. Yesterday we were taking a look at the SOX, so I didn't look at that since then. We should go pay a visit to the SOX because we were looking at a resistance level inside that index as well. So let's go see if I can. Here it is, upper right-hand corner. Let's go see what it is doing. And no, that did not break above the resistance line. So you can see the consolidation that the SOX has been in. And you can see that the level of resistance held yesterday, still traded into it this morning. So we're not seeing a breakout inside the SOX. Remember, you can't bust it up. What this will try to do most likely is, in fact, bust them down, move all the way back down to the 450 level. Now, this is nice because you got a nice little breakout here. So if the market were to break out today, knowing that you've got this consolidation that is in place, that might be a nice place to take a long position. Likewise, if the market breaks down, maybe this is an area to be paying attention to as a trade to the downside here. Now, you got to be careful, though. And what I don't like about this is you've got this gap up from September the 10th out here. So, that's going to be your first area of support, which we'll say is the high of the September 9th candle at 482.54 out there. The next area of support would be this bull separating line right here, a candle on September the 4th. So that would say you'd have additional level of support right around 463 or so. So that is in the SOX index out there in the marketplace. So what else should we take a peek at out here? What should we take a peek at that we haven't looked at? You know what? Let's go take a look inside the. The sectors inside the S&P 500. So let's start off. Let me go find that tab out here. We've got 9 sectors to cover. We touched on this yesterday, so it's probably good for us to be paying attention to the sectors as well. We've got the. Let's look. I don't think I looked at the energy sector yesterday, so let's just start off with the energy sector. The energy sector, this had formed a very nice A to B, confirmed A to B equals CD up. It did this on the trading session of August 28th as it took out a B point, which had 7.2 million shares, and it was taken out with 11.8. That set up at least your 1-to-1 A to B equals CD. As it made that 1-to-1, it never gave us a bearish reversal signal. Again, it's the XLE that we are looking at. In fact, some people consider this candle right here to be a reversal candle. That's the hanging man out there. I struggle to figure out how that's really a reversal signal. I think the Japanese, they just kind of messed that one up. But nonetheless, it's a hanging man candle. That's the only bearish reversal signal that we have seen. On the other hand, what we have seen here is we've seen the energy sector get above the key reversal session here from May 22nd. However, that's really not a reversal signal. That's not even a three-river evening star candle formation out here. Nonetheless, you're up above May 22nd, and unless price breaks below it, you can say that the energy sector here also is breaking out, neither over bought nor oversold, so it's got room to run to the upside, and this still here looks bullish. So if price continues to move higher, what we should expect, let me see if there's any larger pattern that's out here. Let's put this on a weekly chart. Let's do that. I haven't looked at a weekly chart on the XLE for 24 hours or so, so let's go take a look at that. Now, the weekly chart on the XLE, so if the markets break out here, what the XLE will do, because it's trying to get above the May 24th, the May 22nd level, 83.95. And what this will do is this would run up to the top of the price channel. So you can see the nice price channel that it has been traveling in on a weekly chart. We can also see that it has very, very, did I say very? I did. It's got very nice support. Just take a look at that trend line coming off of the lows here from June 8th out there. Each time the market has come down and tested that area, that level is held. The most recent time was on August the 23rd out there. So if, in fact, the market breaks out, you'll see it close above 83.95, and that'll set up a run for the top of that price channel. If we just take a look at some AB equals CD patterns out here, there's one of them. that says it's already completed. That's your 1-to-1 out there. So I would say about 88.47 might be the mark. So we've got 1A to B equals CD at 88.47. Let's go check out the other ones out here inside the energy sector. Let's see what we get as far as that A to B equals CD pattern. That would take you to about 85.98. So that would be one range. Let's take a look at the last one, the smaller one out here, and that's coming off of the lows from June 28th up to the high out here on August the 2nd. And it looks like that would give us about, let me redraw that. Let's change the color on that one. Let's because otherwise it becomes fairly difficult to see. So here's our A point, there's our B, and there is our C. We'll change the color. So I'd say 87.70 is really the target on a breakout inside of the XLE out there. And as it would get up there, well, it'd be taking out the highs going back to April of 2000. Well, it's already taken those out. So it's got clear sailing if, in fact, it wants to break out. Now, you go back further, it would get back in, make 100% move by getting back into the May 2008 time frame out there. So that's on the energy sector. Let's go take a look at some of the other sectors. So that was the weekly. Let me change this back to daily out here, not to get confused. Let's go take a look at the XLK. The technology sector, that's the number one weighting inside the S&P 500. Let's go see if we can find some bullish or bearish candles hanging out inside that. Where is it on my chart here? XLK, there we go. The energy sector, that right now is trading out at 32.46 out here. We recently had a shooting star candle inside of the XLE. That shooting star candle taking place. Where is it? Where did it go? I thought it was out here on the XLK. Apparently, oh, you know what it was? It was on the weekly chart that I had the shooting star. Let me go ahead and put that out here. So let's put the, weekly's got more of a meaning than a daily. So here's the shooting star. I knew it was out there. The shooting star on August the 16th, and the high is 32.47. Right now you're at 32.46. So that's your area of resistance inside of the technology sector. Now recall, this is the number one weighting structure inside of the S&P 500. So this is going to be important for us to be watching as well. No real significant resistance other than that shooting star to be paying attention to. Now, on a weekly chart, you had a bear sash candle down here as well, but it's really going to be the shooting star. It's going to be the price of 32.47 that is going to be the key. What is nice about the XLK out here is just take a look at that rising price channel. Then you want to go ahead and mark these on your charts out there because this has proven to be a strong area of support. And if this thing ever does crack that would be extremely bearish. That is in the technology sector. Now, that's on the weekly chart. Let's go take a peek here at the daily chart, see if we can find anything of any significance resistance-wise, support-wise out here, candle-wise. And really, we'd have to come back here. The resistance area really being set up here, I'd have to say, which is the top of the May 22nd level. Now, not because May 22nd, in this case here, was a key reversal session. It was more so you got this little bear sash that took place. That is on the trading session of August the 6th. So that set up a little bit of a resistance area, the gap down from August 14th to the 15th out there. So right now, what we can say is that price is really on the daily chart is above a resistance line, but it's the weekly chart that we're going to pay attention to because of that shooting star. Let's take a look here at the financial sector. Let's do the same thing on the financial sector. Let's go take a look at the weekly chart as well. To start off with, let's go see what that shows us on the financial sector. We've got, you can see that this did break that trend line. So interesting how price has come back to the trend. It's trying to get back inside that. That is the black line that you are looking at on my screen. That trend line I'm referring to, you can see a couple different trend lines here. I'll pull this back for a moment so that you can pay attention to it. You've got the rising price channel. That price has been inside. You've got the trend line that's coming off. That's the red trend line coming off of October the 14th, that low out there. That level hasn't been tested. Hasn't been tested since it made a low on November 16th. And then you've got an even shorter term trend line that was broken. That was coming off of the November 16th low out there. Price now gapping up and trying to get back inside there. The financial sector's got this little bearish reversal signal right up here, this bear sash candle that says that resistance inside the financials sector, the XLF, is at $20.84. Dow's off 42, S&P is down 3. We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades resulting in 1 loss and a combined profit of 129%. Our next move, it's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's off about 40 points right now. S&P is down a couple. Russell 2000 off 3.5 points. Let me check in on the New York Stock Exchange. New York Stock Exchange right now, that is down about 20 points, only 0.2% out there. Declining issues about 851. I don't have the number handy. It's like 3,300 issues or so. It's not possible, not feasible for the bears to take control of the market via the summation index today, but there are some other techniques that would change that up. Let's go out to Springfield, Missouri, to Jeff. Jeff, thanks for calling. Thanks for holding. How are you today?
Great. How are you, Steve?
Excellent. Thanks so much for calling. Are you a native of the Springfield area?
No, but I've lived here about 30 years. So yeah, I've been
okay. Here. Okay. Now that's the headquarters. That's the original home of the Bass Pro Shops, isn't it?
Yep, and it just keeps getting bigger. But locally and across the country, yeah, it's a big operation.
Yeah, it's huge. I used to have a little retail store kiosk in there many years ago. So I remember coming down into Springfield. It's when I was in the Heads on Bodies business, where I'd put your face on somebody else's body and turn those into magazine covers and movie posters. And a great group of people. So it's great to actually see them expanding. Everywhere I go now, I see a large Bass Pro Shop. They're very cool stores if you're an outdoors person out there. That's for sure.
Yeah, they're great.
Yeah, good people. I enjoyed playing golf with some of the group down there. And Jeff, how can I help you this morning?
Well, I've taken a couple of your courses in the past, your kind of day-long courses, and I just was interested to see if you could tell me more about the one coming up next Friday. A little bit more specific. What you're planning for that course. Yeah, it's really what it's the best of the best. So it is using the leading indicator patterns to be able to map out ahead of time where price is going to. So the A to B, the 95% of all stock charts that you take a look at, all charts, not just stock charts, currency, what have you, have that lightning bolt pattern. So the key is, there's a technical, we call it the A to B equals CD, and so I'm going to teach people how to become the master of that C to D leg, because that's the only leg that you really need to focus on, in my opinion. So I will teach people how to buy and sell that. It's one thing to understand the tactical part of it. I will show you the actual strategy for when to be able to get in on those trades. There's about 30-plus different candle signals out there in the marketplace. There's really like about 10 of them that you need to focus on. So I'll teach people how to put that together with all the other patterns, and then also be spending time with the momentum indicator. I did a small workshop on that a while ago. We have utilized that for our trading system inside the newsletter. It's amazing how well that actually works. So that's something that I actually created, and so we'll be going over that. We may be trading live, or I may be trading live just simply because I'm up early doing that anyways. And that's really what the focus is going to be. Everything that somebody needs to just focus on in order to be able to trade the markets, and to be able to cut through everything that you might read in books out there. There's all kinds of great material and all kinds of great books. This course is how do you utilize those techniques and turn those into strategies that you actually can trade from. Because my interest is not just teaching you here's what they are and here's what they do, but how do you actually trade with them. Okay, that's great.
Okay. So I hope to see you there. Thanks so much for calling, and thanks so much for listening to the show. And stay tuned, because our man Basil Chapman is up next. Have a great day, Jeff.
Thank you.
You bet. Stay tuned. Basil will be up next, folks. I'll be back with you tomorrow morning. Be careful today. Could be a little bit rocky out there. We'll be right back, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, Then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.